Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Wednesday, October 24, 2012. Well, a continuation of the trend to the downside today, a candle with a lower high and a lower low, and as we've seen in other markets today, a black body, but a much smaller black body than the previous day's trading, and it does suggest that in net terms between the open and the close, the sellers have lost some momentum when compared to the previous day's trading. The sellers in this case have still closed the market down towards the lows, suggesting that they're still in control of this market, and that's quite significant. But this market has interacted with the round number support at 1700. And that's quite a significant area. Previously it was a strong level of resistance in the past, and in the recent past here level as resistance and then as support, and it wouldn't surprise to see the market bounce off this level and trade to higher levels. Today we've had the close down below this highlighted area of support that we expected to find in a previous strong level, and a solid bearish close down below here. And it does suggest that there is perhaps still some strength with the sellers in this market. When the market attempted to rally back up into there, we saw some price rejection. We can see the shadow here, and that may be significant, that now instead of this area holding as support, it may actually hold as resistance, and we do need to watch that if the market does attempt to rally. Obviously the 1700 round number here is very, very important to the market. It's a round number, it's quite significant because of that, and there has been some rejection when the market probed just down below there. But if we do see the market test down below, we have some minor support down around this area, roughly around 1688, where we can see the shadow on these candles, and then this previous swing high, which is roughly about 1680, 1678 or so, will provide some support for the market. We also have solid support expected down at the 1667 level, which coincides with the bottom of the cloud, and anywhere within the cloud can hold as an area of support for this market and extends from just above where the market's trading down to this level. Now the price rejection that we saw here today also coincided with the market probing back up above the cloud. So it's interesting that when the market has tested back up there with an attempt to turn bullish, that the sellers have come in and closed the market back down within the cloud, so that's quite significant. In terms of the Fibonacci extension, for the previous day's trading we had the market trade in a bearish manner exactly to the 100% level. Today we've seen the trend continue with the market closing below the 100% level, and our next level of potential support based on the Fibonacci extension is at 1679 for the 161.8% level. Coincides with potential support at this swing high that I've mentioned already, so that reinforces that area as a strong area of potential support. In terms of the Fibonacci retracement, we are in an expansion mode of that, and the market traded through the 161.8% level the previous day, and now we are trading down through there, and the next target is at the 261.8% at 1688. Coincides with that minor level of support that I've highlighted here. So those two levels based on the Fibonacci and with just looking at the peaks and troughs and the rejection from these candles are important levels if the market does continue trending down. In terms of the stacked trend channel that I've drawn here, we've got a trend line down through here and a trend channel and then a stacked trend channel, and at the moment the area that the market may interact with next is down here around this 1686 level, coinciding with the area around this level, roughly 1688, that I've highlighted as a potentially strong area of support for this market. But now in terms of Ichimoku, obviously we have a market that's neutral in big picture terms by trading within the cloud. Previous day's trading, the market entered the cloud in a bearish manner. We had the market change from bullish to being neutral in the long-term time frame, and today, as I've mentioned, we saw the top of the cloud hold as resistance for this market, so that's quite significant. It will be an area of potentially strong resistance for the market moving forward. But we also have the market trading down below the Kijun-sen and the Tenkan-sen, giving us a bearish market in the medium and fast term time frames. We had the bearish breakout down below the Kijun-sen here, which was significant, and the market has rallied towards there and gone on with the move, so there still is potential for the market to trade to lower levels. The Tenkan-sen is pointing now quite sharply here, as we see, and that reflects the strong downside momentum that we've seen. quite a few large black body candles, and it really is a good guide as to the momentum in the market. Now moving forward, 1700 is really crucial to this market. If it fails to hold up, then we have these levels down around the 1688 to roughly 1680 level as potential support, but then very strong support down around the 1667 level.